Honorable Chairman PFRDA, Shri S. Ramanji, CGM PFRDA, Shri Mohan Gandhi, senior colleagues from PFRDA, colleagues and friends from DSC, from PFM, from POPs, last but not least, my dearest friends from the MLB community. Vanakkam, Namaskar to all of you. After listening to Honorable Chairman's keynote address, I think one thing is absolutely clear. We've already seen the amount of good work that has happened, whether it's on the regulatory front or product front. The vision has been definitely laid out. The pace of reforms is picked up. The ecosystem, with more PFMs coming into the ecosystem, with more products, the ecosystem is getting stronger with each passing month and quarter. And the opportunity before all of us is also getting bigger and bigger. So thank you for sharing your thoughts, and more importantly for the remarkable work that PFRDA has been doing on all these fronts in your leadership in the last 1 year. And all this is towards making retirement planning a national priority. On behalf of PSC, I would also like to thank PFRDA for choosing us as a partner in this extremely important national mission and giving us a chance to discharge a duty that we believe we owe to all the citizens of this country, so that when the citizens in the country retire, they genuinely retire and have a life post-retirement which they can live with dignity, head up high and chest filled with pride. Another important thing, every journey starts with first few steps. When we reflect back on the success of this initiative, maybe a few years down the line, you'll reflect back with a lot of pride, knowing that Chennai was one of the only 2 cities chosen for the inaugural launch in the month of August 2026. So round of applause to all of you. Moving ahead, friends, India's financial markets are expanding rapidly. The mutual fund industry has grown significantly. Demat accounts have multiplied multifold.
Yes.
Digital adoption also has accelerated at breakneck speed. Yet, despite this progress, retirement savings remains significantly underpenetrated when compared with the size of our working population, and we've seen enough evidence that in the presentation by Mohan Gandhi also. So what this effectively means is what we're looking at is not just the national mission or national priority, but it also translates into a tremendous business opportunity for all of you. Let me also make a slightly provocative statement here. I don't think NPS has an awareness problem alone. I think NPS has a distribution and a conversation problem also. Because every Indian needs to think about retirement. But the reality is, very few actually get up in the morning and say, today I must plan for my retirement. I think they need somebody to ask them that question. They need somebody to explain the mathematics. They need somebody to make the whole retirement planning endeavor a very tangible exercise. And frankly, they need somebody who they trust. And who's better placed to do that than the financial advisor, the FFDs in you, who may be already sitting across the table from the customer every few months. I'll exhort each of you to have that very important conversation with your customer and ask them the most important question. How do we live, especially with longevity, with lifespan going up? How do we live how do we live our post-retirement life of 30, 40 years with dignity without actually having to depend on our children for financial support? So that's a conversation, that's a question I would exhort each of you to start having with your customers. And then later on, dovetail that, weave that into the conversation on NPS planning. Friends, I'll take a small digression here Many of you have been using our BSE StAR investment platform. The platform we all know has been very pivotal in expanding the access of mutual funds through the length and breadth of the country. So just for some perspective, May 2021 was the first time on the BSE StAR MS platform, we hit a number of 1 crore transactions in a month. 5 years later, we've been consistently clocking a number of 8 crore transactions every month on BSE StAR MS platform. So thank you so much for the love and support you have shown to the mutual fund platform. And we expect the same loving support to also be extended to the newest baby from BSE, which is StAR NPS. Our endeavor, as you have seen in the demo that Siddharth presented, our endeavor on the StAR NPS platform also has been to make the client and agent onboarding experience very simple, to make the financial and non-financial transactions seamless, and the overall experience of choosing the pension scheme very simple and intuitive for you and also for the end customer. Friends, let me close with one thought. When we talk about capital markets, we talk about market cap, we talk about transaction volumes, we talk about AUM, we talk about new investors. But perhaps one of the most important numbers I think all of us should really care about is how many Indians can actually retire with dignity. How many Indians can actually live their life post-retirement without any financial support from their children. And I believe all of us in this room, regulator, the exchange, pension funds, distributors, the entire financial ecosystem here has an opportunity to make that number much, much bigger. PFRDA has already provided the vision and the regulatory framework. PFMs are creating the investment solutions. 10 platforms like the ones you have experienced from BSE, StAR MF, StAR NPS, can really help create the rails. But to scale this business, to ensure that it is reaching every household in Chennai, what is the most important piece is participation. And who better to guide that participation than the MFD sitting in this room? So my request would be, please start engaging with all your customers who you are already selling mutual funds to, and also start pitching pension schemes, NPS products to the same set of customers. Once again, my sincere thanks to Honorable Chairman for his inspiring leadership and insightful address. I would also like to thank all our MFD partners present here today for joining in this mission of building a financially secure India. Nandri, Jai Hind.
It is difficult to draw down, and I'm making this point to all of you because all of you are very learned and educated when it comes to financial products. We must all hold some financial instrument in our hand which carries us to a much later period of life. Go to the NPS Trust calculator. You can do it right now as you're sitting. And just put in some numbers. 5,000 rupees every month, 2,000 rupees every month. Do it for a period of 25 years. The assumption is that you will keep getting the returns as they are today. That's the only, sort of slight assumption that is made over there. But you see the power of compounding. I'm not even saying take 100% equity. Take the government scheme which has run for the last 20 years. As Mohan said, it started as a scheme for government officials to move them from defined benefit to defined contribution. That asset allocation, which today is roughly 25% equity, 55% government debt, government bonds, and the remaining is corporate bonds. This asset allocation has given 9.5% year on year for the last 18 years. And therefore, you will see the calculator giving you some extraordinary returns. This is the point that we have to drive home. This is the point that all citizens in our country must understand, that they must hold on to their NPS account, put whatever money you can at any point of time. So we have removed what is called a distribution or a contribution fee or transaction fee. I think there was some 3 rupees or 3 rupees 50 paisa every time you put money into your NPS account. It's the biggest discouragement that we can think of. Why will you charge people to put money into their own account? So we have actually cleaned up the product, the design in many, many different ways. I'm sure there are still some good suggestions which may come from people like you. We're happy to make the product more and more meaningful, to make it more engaging for the subscriber. Even people like yourselves, you will be able to talk to your customers for 35 years, saying you have a product called NPS and it will run for 35 years. Because typically people start between 25 and 30 and they exit the NPS around 70 years, 75 years. Now we have taken that exit age all the way up to 85. So till 85 you can remain in the product. The very fact that you have a product which people engage with for such a long period of time is one of the reasons why many distributors have told me, whether it is people like yourself or the big banks, they've understood that keeping engaged with the customer is equally important. You want to be able to talk to the customer about some product or the other and advise them as they go along. We have looked at the NPS from a wider perspective. And the biggest message that we got from the market was that NPS is associated with retirement. And at retirement, it could be 55 years, it could be 65 years, the cost of healthcare becomes astronomical. It becomes so high. Please advise all your corporate friends, corporate customers, people who are sitting in companies who are enjoying the benefit of corporate health insurance. One day when you retire, it's going to disappear. Suddenly you will be standing without a health insurance because you never thought about taking a health insurance because the company was giving you one. That health insurance at 60 will either not be offered to you because insurance companies don't want to offer you a health plan, or they will charge you anywhere between 60 to 80,000 rupees per year for that health insurance. So therefore we came up, as I said, entirely because of well-meaning people who are in the insurance industry. They said, let us bundle a product, and that is what we have created under NPS Swasthya. It's an excellent product. I will buy it. Ashutosh will buy it. I'm sure all of you will also buy it once we launch it. In another 30 days, we should probably be able to launch it. It does two things. It tells you to hold money in your own pension account so that when you are in need of money, when you are hospitalized, you have your share of money to pay. No hospital bill is ever fully covered by insurance. We always end up paying some money from our side. But using this design, we are now saying, hold 30,000 rupees in your account. You don't go to a hospital, great for you. Keep earning market returns as the NPS allocation gives you. If you are in a 35% equity or a 15% equity, that's your choice. But keep earning market returns for that 30,000 rupees. And the time you need to go to hospital, you need to pay your deductible. So your 30,000 or whatever it has become becomes the deductible for you. Once you have paid the deductible, then the top-up insurance, which the pension fund has secured for you, that top-up insurance will come and pay the 3 lakh or 4 lakh as the share of the insurance company. So we have bundled a product where it is a co-pay or a deductible as it is known. You bring in your part. Typically, the top-up insurance gives you about 8 to 10 times. So if you put in 30,000 rupees, you probably will get a top-up insurance for 3 lakh or thereabouts. And that is how you do not need an expensive base plan or a health insurance plan. You are managing with your dedicated pension amount, which you have stored in a pensions first year account, and you are getting a top-up insurance. You'll be shocked, and I was shocked when I saw the rate at which they offer top-up insurance under a group scheme. So the pension fund acts as the policy holder, as the group policy holder. They are giving you a top-up insurance of typically 3 to 4 lakhs with a premium amount of 3,000 rupees a year. So the mathematics has all been worked out by the insurance companies. They know that when you have paid the first 30,000, the probability of how many people will come to hospital and pay the first 30,000, they have worked it out. And therefore, they are willing to offer under the group scheme a top-up insurance and such low rates of premium. We firmly believe that this is the kind of products that NPS must come out with. Mr. Gandhi explained the Vatsalya product. Absolutely brilliant product because you start saving for a child at birth. You can ask friends and family to contribute into that account all through a QR code. So what we are saying is that the concept of NPS cannot be restricted to 55 years or 60 years when you retire. It is something that you grow with and you continue to live with from an early age all the way up to whenever you live. And on top of that, again, I learned this from the clever people in the market, that the succession planning in NPS is the best. If you are lucky and you die while you have your money in the NPS account till the age of 85, your ability to transfer your assets to your next of kin is seamless and at zero tax. So the beauty of NPS is that whenever you move from one scheme to another, there is no incidence of tax. Because NPS is not a capital asset, it can never attract capital gains. NPS is about income. It gives you an income yield. Therefore, you are taxed for your annuity at whatever tax slab you may be at. We have done a detailed calculation which shows that over a period of 50 years, by utilizing the partial withdrawal, which becomes more frequent after the age of 60, by utilizing the change of schemes that are available, which if you change the scheme in a mutual fund, you end up getting straight away a 12.5% capital gains on that. But in NPS, that change of scheme is tax-free. So we realized that if you calculate this entire comparison, and I'm making the comparison only because all of you understand the mutual fund product extremely well. How will you tell your customers that NPS is something that sits alongside the mutual fund? So hold the mutual fund, but certainly hold the NPS because its benefits are altogether different. And of course, it is a long-term product. You are not allowed to keep withdrawing from it. And that I think is the biggest benefit of holding the NPS product. So the taxation structure is such that if I were to do this entire tax calculation using all the benefits of a mutual fund and an NPS, the total tax paid as a percentage of the AUM is roughly about 40% lower in NPS as compared to what you would have in a mutual fund. So I think we need to, one, as PFRDA, all our partners, the pension funds, the banks, the CRAs, we all need to do many more outreach programs. We need to come and talk about the benefits of NPS. We need to do national campaigns, which we are soon going to start. So how do we create the awareness? And I think all of you sitting in this room have maybe 500 to 5,000 customers who you are dealing with. You all are the natural agents and the natural allies of the NPS system, where you will be able to communicate to all your customers how there are different products and each product is to be used wisely. So I would be really happy. I was told in the last meeting that we did in Calcutta that for you to join the NPS system as a pension agent, you need to choose a particular POP. So you may choose one of the pension funds as your POP. You need to have some sort of an agreement between yourself and the POP. All that has been made very, very simple. And I really congratulate the BSc team for having been working so proactively on this entire software piece. And what I truly enjoy about making everything digital is that there is peace of mind for everybody. There's peace of mind for you because it's a simple product. There's no paperwork. All the data comes to you. Whatever is needed will come to you through various files. And there is peace of mind for the customer because nobody can do anything wrong once you're on a digital platform. So all the money will go through to where it has to go through. So, there is a ease of doing business, which I think we have achieved. And I'm really glad that the BSc system, whether it is on the capital market side or whether it is on the NPS side, we have all proved very well how we can make systems work more efficiently and how the cost of doing business can come down. Actually, when you look at the StAR NPS system that has been created, it is seamless and it is at a very low cost. Look at it from a 25-year period where you will be earning your trail commission over that period of time. And I don't even want to get into the debate of what is the commission here and what is the commission there, because the moment we go to the insurance industry, commissions go through the roof. But we are all about good advice, sound advice. We are saying all financial products are needed. I need a term life, but unfortunately I'm sold a unit. This is the problem in our country. Because I don't understand the difference between term life and ULIP. Somebody tells me something. We have to check this. We have to be honest to what the customer needs, and we have to deliver different products depending on what the customer needs. So all I'm saying is that get into this journey, move into it, try and experiment with your current set of customers. Give us a feedback as to what is it that you further need. I think we're more than happy to work on that feedback and make the systems better. So I don't want to sort of take up more of your time, but I'll be more than happy to sort of hear from you, because I think what we want really is to hear from you as to how you will engage with this product. Thank you so much.
Differs from company to company.
No, how does it calculate it? Is there any benchmark? Is it with linked with in fact?
Sir, it's all linked to the GSET.
GSET, yeah.
GSET.
Yeah.
So different companies are offering different rates. To take LIC, it may be 6.2, maybe for
Yes,
some private companies it will be a little bit more.
10-year benchmark or 15-year benchmark? There is GSET. You take
Sir.
10-year or
Sir, it's based on the actuarial.
each. It differs from each.
Yeah.
Okay. What? Sir, another thing, another. With regard to corporate NPS, either in fact Income Tax Act or with regard to PFRDA guidelines, in fact it requires, I think, little more clarity. Because when the contribution, employer contribution, there are some confusion. Employer, in fact, he deducts from the employee's contribution only, employee's salary only. Okay, but even some chartered accountant, in fact, they are telling this is not forbidden.
No, sir. I think
The guideline of PFRDA is also not very clear with regard
sir, in corporate, there is a cost to the company. So there the employee will define what is his NPS contribution. That will be invested in NPS as an employer contribution.
Yes, that's
So that he gets a 14%.
yeah.
But maybe the interpretation from the chartered account, I think it has to be.
Yes, some
But many corporates are adopting this practice.
that's okay. Yeah, whether in fact PFRDA, Income Tax Act, in fact, there cannot be any clarity. Whether PFRDA, in fact, whether it could clarify on that, even the employer, yeah, it need not be from the employer, from deducting employees, what do you call, salary itself, in fact, could be treated as employer contribution like that. Any clarification could be given from
No,
PFRDA.
clarification is already there. For example, if you see an NPS statement of account, there is a provision for employer contribution, employer
Yeah,
contribution.
true.
So in case of any corporates, whatever the 14%, whatever employer contribution that is eligible for the tax benefits of the
No, employer contribution, employer, he doesn't want to contribute anything here. I think if I'm not clear, employer, he is not ready to contribute anything extra.
Yeah.
Okay, he deducts it from the employee only. Okay. That in fact, they have got some corporates, they have got some reservation, and of course some chartered accountant also say that this is not forbidden.
Okay.
Okay, whether some sort of a clarity whether PFRDA could give.
Okay. NPS. There is a conclusion that I should interest the balance 20% in annuity at the time of taking this employee. 6 years retirement that is gone now. It can after 15 years, whatever purpose 80%, you can take the way you want, systematic way you can take on. The 20% is mandatory, sir.
So my question is, when I started this systematic withdrawal option, there is a compulsion to go for 20% with annuity.
Yeah, 20% is compulsory.
So I cannot go backwards once I started the system building.
You cannot contribute, but you can open another account if you want.
Oh.
Up to 85 years, you can just use it. There is no premature lock-in period. If you need time up to 5 lakhs, you can take out the money. Very flexible.